All right, market and close macro, the main function, 315 to 345. It targets liquidity that's left during the day. All right, so think of it as kind of like it's cleanup time. That's how I describe it. Anybody who's been making money in the PM session, during lunch, in the morning session, whatever it is, whatever liquidity is left on the table, it's time to get them up out the way before we close at 4 o'clock. Cleanup time, all right? They're not going to be making money as we head into the close. It's like cutthroat hour. Let's run against them, because if they didn't take profits before 4 o'clock, it's too late. So if you remember in the market review, if you haven't watched it already, go check it out. We had a 15-minute fair value gap up here. Okay, so we've already, my thought process here is we've already peaked. All right, who's been making money all day? This is where we open at 9:30, roughly. All right, anybody can tell here. People who've been making money are long holders. Here, ever since we opened at 9:30, here, they're trailing their stop losses here. We drop down during lunch. We don't even take out this low. So traders who are fortunate enough to go long, trailing their stop loss here, trailing their stop losses here. Okay, they're making money. Everybody's making money going long until we get to that final hour macro. It's cleanup time. It's time to get them up out the way, right? We're trading to a higher time frame PD array. Again, dollar has reached a sell side liquidity pool at this time of day. So you can expect some sort of retracement higher on dollar, which is great because that sets the stage for lower prices in NASDAQ. Sell side taken. Okay, anybody who trailed their stop losses underneath this low or really underneath any of these lows here, taken out of the market, and we also take out this low created in the AM session. Okay, clearing the table. Once we take out that low, we consolidate into the close. Let's look at another example. That's chop. We're not going to look at choppy days. There's no point. We don't trade that mess. Here. Okay. Cleanup time, final hour. Think about it. And this is how you kind of have to look at order flow. So obviously long holders have been making money here. My thought process is, think about if you were in this long here in any of this move, how are you trailing your stop loss up? Well, assuming I got long down here somewhere, probably trailing my stop loss underneath this low here, underneath this low. I'm trailing my stop loss here, trailing my stop loss here, trailing my stop loss here. We drop down before that final hour macro. So my thought process, when we see this drop down here, anybody who made money in this move here, majority of them are taken out because everybody's trailing their stop losses underneath this low. They want to lock in profit, okay? And we're entering the close. We drop down, taking out the sell side. I'm seeing that as long holders are out of the market. Majority of long holders are out of the market, okay? What does that mean? Where's the liquidity left? Right there. People who like to predict tops, people who like to think the market has peaked and we're going lower, we're crashing. As we enter that final hour macro, cleanup time, its function is to clear any liquidity left on the table. Well, if we already took out the sell side here, all that's left is the buy side above this high. Fair value gap, fair value gap, fair value gap, order block, buy side tag, running through that, retrace back into this range, and then we consolidate into the close. All right, again, incorporate bias. So if dollar is looking bearish, that's even more confirmation to expect buy side to be tagged and ran out. Let's look at a couple more. All right, that's just sideways chop. We don't care about that. All right, here. Zoom in just a little bit. Let's zoom out a little bit. So consolidation here. Think about where the liquidity is resting. Again, let's just say for the sake of this video, dollar is looking bearish. Okay, I use the dollar a lot in my analysis. Let's say dollar is looking bearish and gold and Forex or whatever is looking bullish somewhat. Let's say S&P and Dow also looks bullish. Okay, you have to have that narrative as well. You can't just trade the final hour blind. But if we're looking at this, who's still left in the market? If you're long here, think about who's been making money all morning. So 9:30 open is about right here. Okay, long holders here. Think about where they're trailing their stop losses. We drop down. Everybody's stop losses is going to be placed underneath this low. We start to rally. They're trailing their stop loss here. Drop down. We don't take out this low. Stop losses are being trailed here. We drop down. We don't take out this low. Stop losses being trailed here. We rally. Boom. So even though we don't take out this low here, that's fine because I'm getting a read. I'm pretending that I'm retail and I'm trailing my stop loss up underneath these lows. We drop down, clearing out the sell side underneath this low here and this low here. Now it's cleanup time. Final hour macro. Who's been making money? What liquidity is still left on the table as we approach this final hour? Look at all these highs here. We don't run out any buy side. Okay, traders who went short here, thinking this is resistance. We also have this double top. We have this high. We drop down, come all the way back up. We fail to take out this high. Retail is seeing that as strong resistance. I'm having my eye on that as we approach the final hour. Drop down. Traders are trailing their stop losses. This high, drop down, trailing their stop losses. This high, drop down. We don't take out this high. What is that? Equal highs, buy side liquidity. So we have equal highs up here, and we have equal highs up here. The market is not likely to leave these highs intact. Fail to take out this high. Traders are trailing their stop losses down. We drop down, rally up again. Don't take out this high. A lot of buy side. And again, we've already cleared the sell side liquidity underneath these lows. So it's time to get them up out of the market. Market on close macro. We trade down, consolidate, 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 rally, breakaway gap. Okay, you don't really get a fair value gap entry here, but if you use a different model like a breaker or this fair value gap here, there's nothing wrong with this entry. Okay, market closes at 4 o'clock. This entry is at 3:47, so you still have 13 minutes until close. 4 o'clock is right here. And notice when your buy side gets tagged. 3:55 p.m. Any liquidity left on the table, cleanup crew comes through, gets them out of here. All right, right here. This is a beautiful example. So think about who's been making money. Consolidation, consolidation, right? Right here. Assuming traders were in this move going long, this is, I think we can all agree, this is the cleanest displacement outside this consolidation. Okay, everybody's seeing this price move here. Where are the stop losses in this move? It's going to be underneath this low. We trade down, fail to take out this low. We start to rally. Okay, as price is moving up here, we fail to take out this low, and we rally up here. Think about it. If you're in a trade, let's say you enter somewhere in this price action here, right? Stop loss beneath this low. You kind of have to have the mind of a retail trader when it comes to the final hour macro. If you're in this position here, are you keeping your stop loss all the way down here? Or are you trailing it underneath this low, underneath this low here, underneath this low? You're trailing it up. Why? You want to lock in profits. You want to start taking off your risk. We don't take out this low. That's fine. We don't need that. Orders are here, here, and here. We drop down inside that final hour macro. That could be your trade. There's nothing wrong with that. You can enter a fair value gap or volume imbalance here. You have a fair value gap here. Clean out the sell side. Okay, that could be your trade in the final hour. But I like these highs up here. Way too clean. Way too smooth. Relative equal highs. That's buy side. Fair value gap. Okay. Which liquidity is left on the table? Well, we've already taken out sell side. Traders who were in this move going long, their stop losses trailed here, taken out. The buy side that's left and needs to be taken care of is up here. We have a small little, right there, small fair value gap there. We rally, come back down, 2 down close candles. That's a bullish order block. Rally again. Once we explode through the buy side before 4 o'clock. Okay, market closes at 4. Take profits. Boom. We retrace and consolidate into the close. And that's it. All right, so here, this is actually the trade I took on Friday, which was yesterday, I believe. No, Thursday. Duh, this was Thursday. So if you zoom out, okay. People have been making money going long. Sell stops. Now, right before we get to the 315 to 345 window, sell size taken out. So at this point in time, right here at 315, who is making money and where is the liquidity that's left in the market right now? Well, it can't be sell side because we cleared all the sell side already, right? All this taken out, we dropped down. Okay, everybody who was fortunate enough to catch this move going long with their stop losses beneath this low, this low, this low, okay, all that's taken out on this drop lower. So as we get into that final hour, where's liquidity? Above this high here, above this high here, and then of course above this high. All right, so I wasn't fortunate enough to get in down here because I was editing the trade I took earlier, so I really didn't get to my charts until we're about right here, clearing out the sell side. Okay, I identified, and this trade is on YouTube if you haven't watched it already, but this was the liquidity that was left in the market. All right, working this fair value gap, you can see it offering support, and also down close candles are offering support. So that is signs of bullish order flow. This down close candle, okay, offering support, down close candle, support, down close candle, support. These two consecutive down close candles here being used as support. So that's telling you that order flow is bullish. Bearish order blocks, up close candles are getting ran through. Okay, they're not getting respected. We also have a bearish breaker here that didn't get respected. So that's telling you that there's a shift in market structure. We have a high, low, higher high. Ideally, if you're bearish, you want to see us trade up into that and work lower. Okay, we blast through it. So now, next fair value gap opportunity to go long. Okay, if you missed this entry, if you're comfortable trading bullish order blocks, these two consecutive down close candles, you can buy that. Stop loss underneath the low. Buy side, buy side, buy side. Okay, those could be partials if you have multiple contracts on. All right, so if we're looking at it like this, who's been making money all morning? Okay, obviously people going short, they're trailing their buy stops above this high, above these equal highs, this high here, this high here, this high here. Okay, this high gets ran out, but let's say traders don't trail the stop losses here. This high is pretty obvious, and you start to move away. We run that, okay, during the final hour. This is why it's kind of important to have an understanding of liquidity, and this is why I say you have to kind of think like a retail trader. Just imagine yourself if you're in this short, right? If you're in this short anywhere up here and you're holding for something all the way down here, I don't know, doesn't matter. But if you're short, where are you moving your stops? Here, here. Okay, if you didn't move your stop loss here and get stopped out, you're definitely moving your stop above this high as you start to move away. Okay, as price is trading all the way down here, those buy stops from these highs are going to be trailed down right above that high. Well, we get to the final hour macro. Okay, just a couple minutes in, we run that liquidity and get displacement with the fair value gap. So majority of traders who are trailing down their stop losses, they're taken out of the market. Okay, short traders are taken out. Now that we know that, let's clear that off. Who's left in the market? Who's making money now that we knocked out majority of traders going short? Traders who are chasing this move here. Okay, sell side liquidity. That's what's left on the table during this final hour macro. This low here, this low here, this low here. Traders are trailing their stop losses up. Okay, definitely sell side resting beneath this low because people are going to be chasing that move going higher. You get a fair value gap entry here. Okay, and draw it through. Last up close candle is a bearish order block. We work that here, come down once more, break down. Breakaway gap. Preferably, you don't want to see that open. Now, this is why I also have, if you look at my trading plan, it says my entry model most times is I enter with a fair value gap or a volume imbalance. Most people don't see this as an entry. I left it out on purpose. And there's something else I'm going to highlight as well. But let's say you're not comfortable taking this first fair value gap, or let's say you missed it, no problem. You have this right here. That small little volume imbalance right there, that's an entry. Because if we're kind of consolidating here, okay, we're expecting lower prices, we cleared the buy side, we understand that sell side liquidity is left on the table. Okay, we get this fair value gap here. Treating that as a breakaway gap, ideally, you want to see that stay open. So if we're expecting this fair value gap to stay open, where can we enter to go short? The volume imbalance. right there. This candle opens, trades up, right there, that's a short. And you can feel comfortable putting your stop loss above this candle's high, which creates the breakaway gap. But more specifically, what's this right here? So that's 2 PD arrays to go short. This is a bearish breaker. High, low, higher high. We break lower, breakaway gap, volume imbalance, and then the breaker. Okay, go short either in the volume imbalance, or if you don't see that, if you don't trust volume imbalances, no problem. Just short it at the low of the breaker. You can put your stop loss above the high of the breakaway gap, which is pretty much on top of the bearish breaker. That's a great trade idea. Understanding liquidity, buy side already ran out. Target the sell side here, partial. Leave a contract on for the sell side down here. Finishing right on time. It's 10:58. 2 minutes early, not bad. Anybody have any last questions, comments, concerns? We could stay for a few minutes longer if there's any other questions or things you guys have. Have a great rest of y'all's weekend. I'm going to update the daily screenshots channel and all that other stuff, hopefully by today. And that's it. See you guys in the market tomorrow. No, not tomorrow. Monday, 9:30. All right, peace.